implemented. One key thing to know in relation to microfinance bank is that in relation to unit microfinance bank, because of the nature of that institution, the central bank requires that a unit microfinance bank should have only one executive director, and every other director will be non-executive directors plus one independent non-executive director. And the CBN Code of Corporate Governance that applies to microfinance bank is also similar to the codes that apply to finance companies. And there are other codes that apply generally to the other sectors that are regulated by the central bank. Another key thing to also note is that we have the Nigerian Code of Corporate Governance 2018 that applies to public companies, private companies that are regulated by other institutions, and then also holding companies of other companies in Nigeria. Now, this National Code of Corporate Governance also applies to CBN regulated institutions. But when you look through the various codes, you'll see that there is a convergence between the national requirement of national code and those of the central bank. There are only little areas of conflict. But for most fintechs that are regulated by the central bank, the key requirements for them that you have to comply with the requirements of the central bank. Now, in relation to the National Code of Corporate Governance, if you are a fintech that's not regulated by the central bank, and also you do not come within the regulatory purview of the National Code of Corporate Governance, and then you take the view that, oh, I don't have to comply with any Code of Corporate Governance requirement. There are benefits that will accrue to an institution that the governance structure is appropriate and it's robust enough to ensure that is run effectively. I have instances where we have had to be involved in transactions between foreign institutions and companies in Nigeria, where those transactions simply could not proceed. Reason being that you have the foreign investor didn't have confidence in the fact that those companies were not strong in corporate governance ethics. So as a result, those deals most often are not fair, will fall through. And whereas some cases, a deal that could take 6 months, 7 months, could take 2-3 years to complete, because the investor is trying to ensure that the corporate governance requirement of this institution is restructured and ensure that it complies with what is required. For institutions that are regulated, the key requirement is that they have to comply with the requirements of the various codes before they are licensed, so they don't have major issues. Most of the fintech who are into lending that are operating with money lender license, they do not come with they are not required to comply with the codes of the central bank. And also, most of them will not come within the National Code of Corporate Governance. But it is advisable as an institution who is hopefully be looking for investors who want to ensure sustainability of that business, who wants to ensure that that system runs transparently and the risk management is risk issues are minimized. It is important for that fintech to adopt either the requirement of the central bank code as a form of self-induced obligations, or comply with the requirements of the National Code of Corporate Governance. While doing that, that will ensure that that fintech institution has trust and confidence of investors, is able to have employees' loyalty, because employee will see that this company is properly run, properly governed, and will ensure that I have loyalty to the company, and if anything happens, the company will remain a going concern. It's not the case that we have an institution and the brain behind it is no more, and that institution ceases to exist. So these are some of the key requirements for Code of Corporate Governance, and also the reason why it is essential that institutions ensure that they institute sufficient Code of Corporate Governance in relation to their operations. It is not just to comply with requirements or regulations. It is also a way to ensure that that institution is efficiently run, efficiently managed, and that power is not concentrated in a single individual or a few individuals, and that there's a reporting line that everybody knows that if a particular person is not around, there are others who are within the system that are able to operate the system, and the system will run efficiently in a manner that addresses the interest of all the stakeholders that are involved in that particular institutions. Thank you.
Thank you very much, Joseph. Now we're moving on to the next one, and it's focused on fintech and social impact. And I'd like to invite Dayo Ademola, CEO, Branch International, to please step forward and speak on fintech and social impact. A round of applause for Dayo, please. Thank you.
Cool. Good morning, good afternoon, everyone. My name is Dayo Ademola. I'm the Nigerian West Africa MD for Branch International. Branch is a full-service digital bank, so we offer loans, investments, debit cards, and all of that. And I'm here basically to talk a little bit about fintech and social impact, and I'll make it quite quick. Excuse me. So how I've structured this is just to ask ourselves three main questions around this topic, and basically end up with what it is that I think we should be doing as an industry to have more social impact as fintechs. So question number one, what's the current state of play? Not news to anyone, but globally, fintechs have been able to command the largest share of venture capital investments in startups and in going concerns. And we're largely able to do this because fintech, I think, is one industry that can strike the double good of doing well and doing good, which means you can offer your investors great returns on their investments, but you can also have a positive impact on the societies that you're operating in, because fintech by its nature gives you the potential to operate at scale. So just a quick data point, in 2021, Africa and Africa-focused fintechs commanded about 62% of venture funds that were invested, right? And that came up to about $3.2 billion. Still small, is a drop in the bucket of the total amount that was invested globally, but in the scale of what's happening on the continent right now, that's 62% out of all industries, right? So you're thinking health tech, and everything else that is out there. Fintech took in 62% of this. And a good proportion of that is development and impact funds. Because again, referring to my first point, fintech is one industry that gives the opportunity of great returns, as well as having a positive impact on the societies in which we operate. And the way firms design, manufacture, distribute, and sell products and sell their products also impact not just the bottom line, but society as a whole. Okay, there's a bit of a lag. Yeah, this Clicker is making me look bad. Okay. So my next question is, have fintechs had a significant impact on Nigeria? I think the resounding answer to that is yes. A good data point, between 2016 and 2020, looking at the Athena Access to Finance survey, there was a 13% of increase in Nigerians using just payments. And this was almost 100% driven by DFS and fintech, meaning that payment solutions are getting closer to the Nigerian user simply because they're able to use their phones, be they smartphones or non-smartphones, because there are all kinds of services that fintechs and other digital financial services have made available to people. We also saw an increase of the banked population from 38% to 45%, which was a jump of 36.5 million people to almost 48 million people within that time frame. And again, that is largely attributable to DFS, digital financial services, and fintech. So are we having an impact? Yes, absolutely. Speaking about firms specifically like Branch, firms like us have an impact not just in financial sector widening, but particularly in financial sector deepening. Because while you have almost half of the adult population in Nigeria is banked, a good portion of them have one single product, which is the savings account. Some of them also have a debit card, for example, but a very, very tiny majority of those people have access to credit, which is the most underutilized financial service in Nigeria. So what institutions and firms like Branch are able to do is that if you're already banked, i.e. you have a BVN, you have a savings account or whatever it is, we're able to extend credit to a large group of users that traditional banking in Nigeria is not able to do. I have a data point there that says we've accessed about 4.5 million Nigerians. I was just corrected an hour ago that it's actually 5.2 million since being in Nigeria coming into Nigeria in 2017. So I think, again, back to my original question, have we had a significant impact in Nigeria? The resounding answer is yes. Let's see if I can move down one slide. All right, so given those two things, here's a larger question. What more could we be doing and should we be doing? The first thing I think is doing a better job of setting and measuring specific impact goals. So a lot of times with fintechs, you'll see big impact goals in our mission statements, in our objectives, but a lot of the time that doesn't actually trickle down to goals that we are tracking and tracking key results against. They're just big statements that we make, and then we face the business of doing business rather than also making an impact. And one way to change that is to align impact goals with revenue goals. So in whatever model that you have built as a fintech, that is a revenue model, that is a profit model, you can actually layer impact goals on top of that. So if your target is to reach X amount of users, you can layer on top of that a certain percentage of those users should come from a certain underserved section of the country, for example. That's just a single example. So there are many ways in which you can layer impact on top of doing well as an organization. I'm not a big believer in sort of 100% charity work because I personally think that is unsustainable. But if you're able to layer impact on top of good business, that is where you have the largest successes. And again, where there's room, experiment, right? So us as operators spend a lot of time, we're very profit driven. We have investors who have put their cash and their faith in us, and we have to spend a lot of time getting returns for them. But you get to a certain position where there's room in your bottom line for you to experiment a little bit. So dedicate some of your brain trust and some of your profit margin to experimenting. What else can we be doing to reach more people and to have a deeper impact with people? And truly, at the end of the day, you'll see that this largely has a positive impact, because if you're taking time to experiment, then you're going to find nuggets in there that actually add to your bottom line. And another big thing, celebrate successes. right? So we have, again, like I said in the beginning, we set these huge impact goals that we write in our objectives without, building all the steps that lead us to achieving those goals. Now, if we celebrate the successes, we build the steps that are all the way that lead us to those big goals. We should also take out the time to celebrate the successes on that journey to getting there. And, even when it comes to managing a team, managing your investors, managing your board, being able to celebrate those smaller successes keeps the organization on the path towards achieving the big ones. And again, be flexible. So the last 2 points, I think, feed off of each other. Be flexible and be ambitious, right? If we're honest with ourselves, if we know that the goals that we set for ourselves in January do not necessarily make it all the way through the year to December. And this is because things change, the economy changes, the operating environment changes, the internal operating environment changes. You have new goals, you have new people, you have new focuses. And as well as, being dynamic and flexible in the running of our businesses, we should also be dynamic and flexible in the impact goals that we set for ourselves. And let's be ambitious. As an industry, I think it's important for us to be super ambitious, to set big goals for ourselves, because setting big goals is the only way you achieve them. So think big rather than think small. And that's it. I have a minute left. Thank you very much.
Thank you very much, Daya. Thank you so much for giving us 1 minute and 10 seconds. We're very grateful. Now to fintech and financial inclusion. I'd like to invite Branka Mrachayat, CEO 9PSB. Please let's give her a round of applause as she makes her way to the lectern. Thank you.
Good afternoon, everyone. I'm always passionate when invited to talk about financial inclusion, and especially when we are talking about role of fintechs in financial inclusion. So let me start first by introducing our bank. Nine Payment Service Bank is the very first digital bank launched in late 2020, and we are one of 5 payment service banks. So as the gentleman from NIPS mentioned earlier, that at some point Central Bank of Nigeria decided to leverage on access and technologies that telco companies had and still have across Nigeria. They decided to provide licenses to the 4 leading telco companies across Nigeria to establish their banks. So the major shareholder of Nine Payment Service Bank is EMTS or Nine Mobile. Nevertheless, we are a standalone digital bank that is on a mission to provide simple, accessible, efficient, inclusive payments, service, and banking products and solutions. And we are all about financial inclusion. So the goal for us when we started was to ensure easy access to useful and affordable financial services from anywhere. So basically what we do, we bring bank to our clients' homes. So there are no paperwork, there are no branches. Basically you open your account in 2 minutes. So, but beyond offering these accessible services, what we are very much passionate about and what we believe that is key element for financial inclusion in Nigeria to happen is focusing on financial literacy. So we want our clients to be aware of all various opportunities across the market and to educate them why they should be part of financial ecosystem. So let me go step back and make a reference to financial inclusion. We hear this word like buzzing all the time, but what financial inclusion is all about? So the other day, I heard a very funny remark. A lady said that we all know what financial inclusion is. That's when fintechs go to market and they try to take your money to put on their accounts. So it's a funny remark, but financial inclusion is not about that. We truly believe that all individuals and businesses should have access to useful and affordable financial services. What that means in practical terms. It's one thing to access all these financially excluded people across Nigeria and to open accounts for them, but that's not sustainable financial inclusion. The first step for account holders is to start creating and actually recording the data on platform and systems so that they would go to the next step. Next step being providing them access to all financial services that will bring benefits to their lives. Access to capital, access to better healthcare, to better insurance, to pension funds. And it starts with financial literacy. And it also starts with cooperation between all market players. What that means, so that ultimately, this is not a sprint. It's a very, very long marathon, to put it like that. And for this society and economy to grow and thrive, people should have access to capital, affordable capital. And nobody will give loans, not even microfinance banks. Nobody will give loan to a market person that is doing all transactions in cash. So this is where payment service banks and 9PSB come in. So we provide limited, the difference between payment service banks and actually other deposits banks is that we cannot give loans. So that means that how we at 9PSB see our role is that we are building the bridge between those who are financially excluded and deposit banks, building this track record, collecting data, and preparing, educating those who are financially excluded and preparing them to be able to apply for loans that the deposits banks can only offer, being mortgage loans, being car loans, being like all other kind of different loans. So also, I would like to remind us about some numbers in Nigeria. Actually, the funny thing was that 2 days ago, on 23rd of October, we marked 10 years since the Central Bank of Nigeria launched National Financial Inclusion Strategy. It was 23rd of October of 2012. So it was a decade ago. At that time, the numbers are really, really low when it comes to financial inclusion, and Central Bank has set some really, really high milestones and expectations. I will not run through the numbers, but I will say that a decade later, we see that the needle hasn't moved significantly. And as of today, we have around 40 million of adults Nigerians that are financially excluded across Nigeria. So what are the challenges? Regulation is there, frameworks are there, policies are there. What were the challenges in order to reach those milestones? First, lack of access. We that live here in Lagos, in Victoria Island, we do have internet, we do have power, more or less. But people across Nigeria, they are lacking infrastructure, they are lacking access to internet, they are lacking financial literacy. Then the next challenge is also high access cost, and then we have cultural and society roadblocks. So what are solutions to that? And what are we focusing on is providing localized financial literacy. We know that there are more than 300 tribes across Nigeria that not necessarily speak English. So that means that we have to bring education to them in language that will be simple and understandable for them. Then we also have to create a simplified product and processes. That means that we are not trying to enforce what we in fintech and digital banks see as appealing products to them, but we have to pinpoint their needs and to understand their demands and to complement their way, how they live today in order to basically lead this transition from cash to cashless society. Then also low minimal cost of access. So that means with good platforms, with good solution, we are able to provide lower cost products to them. And then the key one is collaboration among stakeholders. So that means that each and every fintech player, regulator, and bank has its own role to play in this fintech revolution, to call it so like that. So let me tell you, I have 2 more minutes. Let me tell you what at 9PSB, how we are delivering on this. So we are deliberately positioning our bank as bank for all Nigerians. And we are giving priority to all local solutions through partnerships with local talents, with partnership with vendors, with partnerships with different fintechs, payments, different payments providers and banks. So we are all about products. If available in Nigeria, we don't outsource. We buy products and partners with providers here in Nigeria. Then also, as a part of our social objective and recognition of Nigeria as the next major fintech hub, we are focusing and deliberately seeking out and giving local people like youths, like women, like students, opportunity to learn about financial institutions, to grow and then improve their own circumstances and living. Then the next one, we are mobilizing all available channels across Nigeria. We are talking about fintech and digitalization, but the reality today is that in order to bring this to people across Nigeria, especially in rural areas, we have to do a lot of legwork. So we are reaching out to those who are unbanked and underbanked, underserved, to bridge the infrastructural gap through agent banking. As of today, we have 8,000 agents across Nigeria in all states. Then USSD, that is understandable, translated in local languages. Then mobile application, and also through partnerships and distribution. And at the end, we are creating an enabling environment in terms of banks' products that we are offering through our API, Open Banking API, for all fintechs and other stakeholders to be able basically to offer last mile services to targeted users across Nigeria. So my time, I have 8 seconds. So I'm very passionate about cause, and if you want to learn more how you can contribute to closing financial exclusion gap in Nigeria, please visit our site. We have a stand booth outside, and take a part in this revolution. Thank you very much.
Thank you very much, Branka. And now to FinTech and the environment, Green Tech Finance. Ladies and gentlemen, join me as I invite Dr. Bola Karimu, Financial Sector Lead at FCDO. Please, a round of applause for Dr. Bola Karimu.
Good afternoon. I'm online. Can you hear me? Hello, can you hear me? Hello, can you hear me?
Yes, we can hear you.
Oh, fantastic. Thank you very much. And my sincere apologies that I cannot join you in person, but I've been following the event, and it's very, very interesting and very insightful as well. So I've been asked to speak very briefly about fintech and the environment, and how we can really start thinking of how fintech can really help us to deliver on environmental goals. I'll try to be very brief. All the other speakers have really made very valuable points, and I'll try to leverage on that. So in terms of background, I think it's no gainsaying that we are in a very difficult position now with regards to the environment, and we're likely in a state of emergency. When you kind of put on your TV or on to the social media, is all about flooding now, and that is just one aspect of the effects of the changes in the climate condition as it's impacting on a developing country like Nigeria. So for me, with regards to the to the environment, I think it's very important for fintech and the financial sector at large to really be to rise to the occasion and the challenge in terms of designing appropriate and contextualize product and services that would enable Nigerians to be able to adapt and also to mitigate the climate change effect. We've seen a lot of displacement going on with the recent flooding. We've seen lots of lives. We've seen livelihoods and properties being destroyed. And apart from this, we see a key sector to the economy being really significantly affected, from agriculture all the way to economic and trade. But the question now is, how do we mitigate? How do we leverage on the financial sector at large and fintech specifically? What are the roles of fintech, whether they are startup, whether they are incumbent, whether they're technology company, how can they come in to support us in this at this crucial time to develop a newer approach, new tools and instruments that will enable us to adapt better to this changing climatic effect. This is a kind of a part of the reality. This is a common sight when you turn on your TV and you see the devastating effect of flooding over the last few months, which has been occasioned by kind of high, above average rainfall, which has been compounded again by Nigeria as a country and other countries around us, Cameroon, Chad, trying to manage the amount of water in their dams, and releasing this water, which are flooding the farmland communities and also displacing people. And those are some of the statistics that are quite significant in terms of the reported deaths, the number of states actually impacted, as well as the number of people that have been displaced and the ripple effect of that on the humanitarian crisis. Now, in terms of addressing all this, I mean, there's a new nexus, which is the interface between finance, climate, and digital technology. And as we approach COP27, one of the key reflections from the last COP is how can we interface between finance, tech, and climate to help support the development of new ways of addressing ESG risk and vulnerability. There are key environmental issues around flooding, as we mentioned earlier, drought, land use, soil degradation. The list is so endless. And the impact of financial sector as a whole, or fintech in specific terms, stepping in to help to address some of these will be significantly felt around livelihood, around generating of income and new jobs, around even getting some data that will enable us to start measuring and to start reporting and disclosing some of these vulnerability and risk so that we can better prepare and better manage the outcome of this risk as they occur. So how can fintech step in? Is very important for fintech and financial services generally to design products that are contextualized in nature and address specific demographic, also having a gender perspective to it as well, and also supporting the building of data and evidence on climate vulnerability that will support financial institutions and the wider ecosystem to deliver appropriate innovative product. So product need to be tailored. The product need to be able to address not just today's challenges, but challenges that are also emerging that might be impactful in the future. In addition to that, it's very important for financial institutions to start thinking of the need for a shift in their financial asset and portfolio towards a more sort of climate-related assets classes, including renewable energy, climate, as well as climate-smart agriculture. I'll quickly move to the next in terms of recommendation. I think it's important, as I said earlier, to contextualize innovative products and services. And this is important within the context of Nigeria for us to look at critical sectors like agriculture that fit into our livelihood. Someone earlier mentioned financial inclusion is very, very critical. What are the infrastructure that we need to build, and where can fintech really play a valuable role within this? As we try to shift away from the use of fossil fuel towards more renewable energy, what is the role of fintech within this? What are the opportunities that fintech have to really plug into that space? It could be in terms of paygo model or any other innovative model that will allow those that are aiming to shift away from the use of fossil fuel to be able to afford and access those new ways of living. So as I mentioned earlier, affordability is very critical. Access is very critical because even though this innovative product might be there, we've heard a lot about around solar home system, solar irrigation. If individuals cannot access and cannot afford, it's going to be very difficult, for there to be sustainability in terms of the usage of this innovative product. So affordability is important, access is important, and the PSB are also playing a very critical role, just like was mentioned earlier, in getting this access across to the end user in the rural area. So designing early warning signs, very critical for farmers and within the agricultural space, and also design of innovative insurance product that will help to mitigate some of the environmental related losses that might be suffered by farmers, for example, in this case. Other areas that, quickly speaking, that we might want to start looking at in terms of designing our products and services is how we can leverage on fintech to help to incentivize or drive citizens in terms of their participation in environmental management. How can we pass ownership over to citizens and change their behavioral mode in such a way that they see the environment as part of their responsibility? Catering for the environment today in terms of the use of plastic, in terms of the way they recycle, and if fintech can step into that space to be able to design products that might, for example, allow users to really rack up points that could be used to trade for other essential commodities across local financial system, might be a good incentive for people to start engaging in terms of environmental management. Regulators play a very, very critical role. We've been engaging on the part of the UK government with the central bank, with the Security and Exchange Commission, with NICOM, with PENCOM, in creating an enabling and friendly environment for fintechs to ensure that they can thrive, they can co-create, they can test their ideas in a very safe space. For example, the use of sandboxes are very popular, and we're trying to drive that within our engagement with the regulators. Now, we also need to institutionalize the whole idea of a green fintech challenge that will bring together both the private sector as well as the public sector counterpart for everyone to co-create and partner within that space to be able to deliver on the environmental goal. I've also included a bit of the UK's approach and some of the lessons that we can learn from the UK. In 2018, the UK, through the Financial Conduct Authority, launched the pilots for the Green FinTech Challenge to support innovation and growth within that green space. I've included a link here for anyone that might be interested in that particular challenge. The whole idea of the challenge is to bring together startup, incumbent, as well as technology providers using instruments such as regulatory sandboxes, direct support, advisory, as well as bespoke green finance cohort engagement to be able to drive this new and emerging idea about the use of green fintech to really drive environmental impact. Lastly, I've included a bit of example in terms of use cases for anyone that might be interested in this. But at the end of the day, it's very important for everyone to come together in terms of how we can really build the ecosystem in such a way that we create more awareness, we create more trust, we create more leverage for fintech to be able to drive the changes that we want to see within the environmental space. I'll stop here now. Thank you.
Thank you so much, Dr. Bola Karimu, for giving us 2 minutes, 30 seconds of your time, and of course, for an insightful presentation. Please, another round of applause for him because he can see us and he can hear us. All right, so it's now time for Q&A. I'd like to ask the speakers who just took the masterclass to please step forward. We'll take quick pictures, but before pictures, we'll open the floor to the audience to ask questions in a few minutes, and then we'll take pictures, and that'll be it for the masterclass. Please, I'd like to invite the speakers for the masterclass. Ayodele Adeyemi Faboya, Dayo Ademola Joseph, Branca, and of course, Dr. Bola will be joining virtually. So please step forward. Also, I'd like to remind participants who are joining in virtually, you are an important part of this conference. So please, online, drop your questions in the chat box. Use the chat feature, the Q&A feature on Zoom. Drop your questions, and then we can select questions, take questions before we move on from this session. Now, the floor is open to people who have questions. If you have any questions here physically before we take pictures, please indicate by raising your hand. Any questions, physical questions, before we take pictures and close this session? Any physical questions? Okay, I don't see any hands. What about virtually? Please, do we have any questions virtually? No questions online as well. So we can just take our pictures. Please join me as I celebrate all our speakers who have taken the masterclass. Okay, now in the absence of questions, I have been informed that we can take final comments from speakers. Hopefully, if our speakers can make the final comment as brief as possible, would really appreciate. I'll pass the microphone around so that our speakers, get to use the microphone to ask the question. So please. Okay, so you can do a long press at the bottom of the microphone and you can speak, starting with Dayo Ademola, who's at my extreme right. Final comments, please.
Okay, you're putting me on the spot. Final comments. My specific talk was around the social impact of fintech, and just wanted to reiterate that I'm a huge believer in it, and a huge believer in the confluence of social impact and commerce and business. And I think that's what I don't know how many operators are in the room, but that's what I think needs to be at the forefront of our mind, that we have our revenue targets, we have our business growth targets, but as much as possible, we layer impact goals on top of that. And I think that's where the most change can be made. And we also need to make a concerted effort in measuring those goals, because I think that's something that we don't do very well, is actually measure the impacts that we are having, and not to be shy to publicize that impact, whether good or bad, because it sort of garners the entire industry into doing better.
Thank you very much. Over to you, Joseph. Final comments, please.
Hello.
Okay, yeah, thank you. I think my final comment has to do with one of the points which I didn't mention, was in relation to ensuring that you have a board that is, in the true sense of the word, independent. It doesn't mean, we have seen instances where in order to meet regulatory requirements, people ideally who should not be members of board, who have no experience on the issue they're going to be looking at, are appointed to board just to fulfill, quote unquote, all righteousness. I think in the enlightened self-interest of promoters of various fintech is to ensure that you have a proper board that can look the founder or the brain behind that company in the eye and say, this route we are taking, we shouldn't take this route. Not a board that will be telling you, yes, sir, yes, sir. So that it will not be in the interest of the company. particularly in the context of Nigeria, because I had cause to have discussion with someone about a week ago that has to do with generational companies in Nigeria. When you look around, you see several names that were top-notch in the corporate world in those days. But today, most of their companies are no longer in existence. And that is a challenge for us all that are here today and those that are not here, is to ensure that we build institutions that will outlive us and that can survive from generations yet unborn. And with that, we'll have, that would happen by inculcating good corporate governance in the operation and management of such institutions. Thank you.
Thank you very much, Joseph. And to my left, let's start with Branka.
Thank you. So what I would like to say, like as my conclusion at the end, how I see Nigeria today and fintech space, is that Nigeria is a country of two opposites. On one hand, we have all these amazing people, all these fintechs, many of them being recognized as unicorns. We see amazing progress in the last 6 years. On the other hand, we have Nigeria that I mentioned, people that don't have access to power, people that don't have access to internet, to smartphones. So in my conclusion, I would like to say that in order for this to change and to move forward, we all have to come together, not to look at each other as competitors, not to compete between banks, fintechs, different service providers, but to cooperate and also to try to impact regulator and NCC as well, to make some changes in regulation, to provide actually tools for people across Nigeria so that fintechs and digital banks and payment service banks can provide services through those tools. I'm talking about cheap smartphones. I'm talking about internet access coverage in rural areas of Nigeria. Many things have to happen in order for fintech space to thrive in Nigeria. And we all have to put our strength together and to deliver on this. Thank you.
Thank you very much, Branka. Yes, please, it's okay to clap. A round of applause. Thank you. Thank you. And we'd like to hear from Ayodele. Final words, please.
It's working. So, I mean, a lot has been said today, and we've seen some of the pitches, we've seen some of the beautiful things that are being done. But the truth is that unless fintechs understand the importance of getting help, they will always be at risk. And that's the truth. We can't achieve what we want to achieve in the ecosystem without getting help. And that's not just legal help. It's also making sure that you have the right risk manager. It's making sure that you have the right accounting system and accountants. It's making sure that you have the right auditor. It's not focusing on the product and the technology to the exemption or exclusion of other key things that are necessary to build a business. And just as Joseph has said, it's about having the right board as well. There's the reason we have a board of directors. They're supposed to help you. They're not just dummies, right? So it's about putting the right people on your board so they can perform the right functions. Essentially, it's just to encourage and emphasize that we get the help that we need so that we can achieve the heights that we want to get to as fintechs.
Thank you very much. And would like to hear from our virtual speaker, Dr. Bola Karimu.
Yeah, thank you very much. I think I'd just like to re-echo the importance of strategic partnerships and collaboration. Because for fintech, at times it might be that it's easier to work in silos because they just want to get on with their techie stuff and just get it done. However, it's important to bring everyone together, whether you're talking about the fintech themselves, banks, the consumers, to all come together within the same space and to have that enabling environment. I mean, we've been doing a lot in terms of advocacy around supporting the regulators to create that sort of environment, and so that the players will not see themselves as competing in that sense, and can leverage on one another to create an ecosystem where the beneficiary are the people at the bottom of the pyramid. And I think that is one thing that is always missing in most of the design of products and services. A product might be designed for those in the urban area with the exclusion of those within the rural area that are really, really in need of those products and services that will really lift them out of poverty. So as we design this innovative products and services, it's important to contextualize those services and products within the Nigerian space and see how these products and services can really address the needs of the country at large. Over.
Thank you very much, Dr. Bola. Please, a round of applause for all our speakers. Would now like to take pictures. Please, let's take pictures. Let's please rise. And then Dr. Bola can please stay on the call so that somehow we can capture him, on the screen here. We don't want you to miss out on the picture. So please, let's take quick pictures. Yes, two. By the side. Okay. Maybe you can take one together. We can come together then. Thank you very much. Thank you so much. A round of applause for them as they make their way. Now it's time for a product pitch. Okay, you know what I've observed, ladies and gentlemen? I observed that it seems that we need to refill our reservoir of applause because it seems like it's going down. But I know there's so much more. Let's practice it. Let's be more generous with our applause as we celebrate and appreciate our speakers. Thank you very much. Now to the next product pitch. Oh, that's great practice. Thank you. Thank you. And I'm sure that our virtual delegates are also joining us, with sending their favorite emojis to the chat box and, just giving it up for all our speakers who have been contributing to this conference. Now it's time to go into a product pitch. And this one is on Ijebu Market, marketplace, supply chain, and finance for agriculture. And the product pitch is to be done by Segun Ogunlana, CEO, Ijebu Market. A round of applause, ladies and gentlemen.
Hello? Okay, thank you. Sorry, good afternoon, everyone. I'm just trying to test out my slides before I begin. So it's not responding. Huh? Downward. Okay. So yeah, good afternoon, everyone. My name is Segun Ogunlana. I'm the CEO and founder at Ijebu Market. So first, let me tell you about Musa and Tony. Musa is an uneducated smallholder farmer somewhere in northeastern Nigeria who lives on less than $2 per day. And we have 10 of millions like him in Nigeria, as well as 10 of millions of him across Africa. And this is Mr. Tony. I'm also in the picture with him. He's my neighbor. He's an educated potential farmer. And we have also tens of millions like him as young Nigerians, as well as middle-aged Nigerians who are interested in agriculture. 2 weeks ago, Mr. Tony reached out to me and asked me, Segun, I actually have like some acres of land in my village. Please, two things. What can I plant there? And who can I sell to? And I told him, sir, let's have this discussion later. We had the discussion. And when he finished with me, he said, Shegun, in his words, I am not doing anything until Ijebu market is ready. So you need to know why he said that. Please come along with me. First, we need to discuss about the problems that Musa is experiencing that made Mr. Tony say he's not getting started first. One is the issue of where Musa cannot cultivate his entire land. Most people only cultivate just a fraction of their land because of several issues like market access and other things. And secondly, when Musa even cultivates his land and he plants like 1 to 2 some maize on his land, he gets 1 to 2 metric tons on a land that is supposed to get 6 to 9 metric tons. He will still lose 20 to 60% of that to post-harvest losses and harvest losses. And when you combine this is a $203 billion Nigerian problem and a $650 billion African problem. Now, these are the solutions that have made Mr. Tony impressed. One, we're already building supply contracts with key manufacturers. And after doing some steps, this set of smallholder farmers and potential farmers like Musa and Mr. Tony will get seeds, will get fertilizer, as well as extension service and support to ensure that they maximally cultivate their land. Next is for the harvest losses, to prevent the harvest losses, we provide extensive harvest support, logistics to pick up harvest and ensure that it's delivered to cold or dry storage or direct to the people that have built the demand contract to ensure that once that is done, for anybody that plants, you're able to know that at this also point in time, I'm harvesting, we are picking up, and you're getting your returns as it is moved to customers like manufacturers, exporters, and international buyers. That we've actually been able to build orders close to around $2 million as of between end of 2020 to 2021. And we are only able to fulfill just about $600,000 of that because of finance. As we've been making most of our earnings from product sales, trade brokerage, trade management, logistics, and finance, although 70% of our transactions actually came from product sales. And the market size of this for agriculture sits about $3.5 trillion globally and around $400 billion in Africa, at least in the basic sense, excluding processed agricultural commodities. Of course, everyone will say, you need to actually, who are your competitors? You have competitors. Truly, well, we have Apex, we have Babagona, we have Thrive, we have Harvest Plus, but we don't see them as competitors. We actually see them as partners and collaborators. In fact, even one of them, a transaction that we're supposed to conclude between Boko and to some parts of the Southwest, as well as some place called Gabrichede in Taraba, to move some also things to the Southwest for them as of last week was between $100,000 to $200,000. But because we couldn't facilitate that, we had to cancel that off. And you will guess why would they contact us? It's due to our own unique advantage of our supply chain efficiency, because they know we have presence even across the border, off to Maradi in Niger Republic, to Garba in Cameroon, to some parts of Chad. So this, we have the country covered for most food and agricultural commodities. And we also had other competencies like our low-cost infrastructure, technology, as well as our access to varieties. And for us to be able to provide these for all the Tonys and all the Musas everywhere, we're looking at incurring some expense of around $4 million for between a period of 24 months and profits of around $7 million. And for us to be able to do this, we need to actually take things much more serious. And like our speakers have earlier talked about things like governance, regulatory structures, and everything, we need to put much more things in place to be able to fulfill all that. And that is why we're actually looking at, getting a kind of pre-seed safe of around $6 million, then $10 to $20 million debt capital commitments that is required for these core commodities, and to also help us to build our team, build our technology, working capital, partnerships and some collaborations, and some cold storage and dry storage leases and others. So these are things that are actually essential for us to be able to put there, because honestly, there are things that we are seeing about food and agricultural commodities across the country that we will actually still feel the very big impact in 2023. Let me just leave it there. We actually have a very great team. My background is chemical engineering and I understand process and flow. And I'm a systemic designer, salesman, and I'm a social innovator. Tech person, Shola, is a senior software engineer, full stack. And we also have a field agri consultant, Mr. Abayomi. And with this, we're also looking at building an extensive team around ourselves to be able to ensure that we deliver this for all the Musas who are tens of millions in Nigeria and Africa, as well as all the Mr. Tonys who are tens of millions in Nigeria and Africa, also to ensure that we are able to feed ourselves, feed the world, and ensure that because in as much as we are looking at things as financial inclusion, we need to understand that these farmers, as we look at money in our pockets as capital, they also look at things like soya, things like maize, things like dawa, that's sorghum, and also as capital. So this is also a form of financial inclusion. And let me just say thank you everyone for listening. Cheers.
Thank you very much, Segun Ogunlana. He's giving us a whole 3 minutes, 1 second. Thank you so much for that. Ladies and gentlemen, we're now moving on to the next and the final panel discussion for today. Now, the focus is on charting new paths. What's new in the tech space, InsurTech, Agri-Tech, EdTech, Legal Tech, and so on. So I enjoin everyone to sit back and enjoy this discussion because it's going to be very insightful. I'd like to invite the moderator, Wale Olajubu, MD, Asset MFB. A round of applause as he makes his way to the stage to come in first and receive the panelists. Now, our panelists are Peretimi Perez, Senior Associate,